Before we begin, it's critical to state that I am not a licensed financial advisor or insurance agent. This video is for educational and entertainment purposes only and should not be considered financial or legal advice. You should always consult with a qualified, licensed professional before making any decisions regarding your insurance coverage. Imagine this for a second. You are a model driver. You treat the speed limit like a sacred text. You brake so smoothly your coffee never spills. You haven't had a ticket in a decade. Then your car insurance bill arrives in the mail, and it's gone up. Again, you're furious, and you have every right to be, because you're not paying for your driving. You're paying for the guy 3 streets over who treats every stop sign like a suggestion and just wrapped his sedan around a telephone pole. You're paying for the teenager who just got her license in your zip code. You're paying for someone else's bad decisions, their bad credit score, their bad luck. For 100 years, the entire auto insurance industry has been built on this fundamentally unfair idea. They lump you into a giant bucket with thousands of other people who happen to share your age, your zip code, and your marital status. They look at broad, impersonal statistics and say, well, people who live in this area tend to have more accidents, so we're charging you more. It doesn't matter if you're the safest driver in that zip code. You pay the price. It's like being graded on a group project where you did all the work, but you get a C- because half your team didn't show up. It's infuriating. But what if there was another way? What if an insurance company came along and made a radical promise? A promise to rip up the old rulebook. A promise to ignore the bad drivers in your neighborhood. A promise to base your rate almost entirely on the one thing that should matter, how you actually drive. This is the billion-dollar promise of Root Auto Insurance. They claim they can save good drivers up to 52% on their car insurance by using your smartphone to track your driving habits. It sounds like the revolution we've all been waiting for. A fair system that finally rewards good drivers and punishes the bad ones. But is it true? Is Root the future of insurance? A game-changing disruptor here to save you a fortune? Or is it just a clever marketing gimmick with a dark side they don't want you to see? By the end of this video, you will have the complete, unvarnished truth. We are going to pull back the curtain and expose everything you need to know. We'll break down exactly how their infamous test drive works and what they're really tracking on your phone. We'll uncover who this insurance is perfect for, the specific type of person who could save hundreds, even thousands of dollars a year. And more importantly, we'll reveal who should avoid Root at all costs, because for a certain group of people, this company could be an absolute nightmare. We'll dig into the fine print, the real customer reviews, the complaints, and finally, deliver a definitive verdict on whether you should let Root track your every move behind the wheel. To really understand Root, you first have to understand the seismic shift that made it possible. For decades, the insurance giants, the Geicos, the Progressives, the State Farms, have operated like massive, slow-moving battleships. They rely on ancient data points: your age, your gender, where you park your car at night, your credit score, yes, your credit score, which has absolutely nothing to do with your ability to merge onto a highway, and of course your driving record. The problem is, your driving record is a record of your mistakes. It doesn't show them the thousands of times you drove perfectly. It's a system designed to punish, not to reward. It's an analog model in a digital world. Then, a new technology started to bubble up, a concept called telematics. It's a fancy word for a simple idea: using telecommunications and information technology to monitor a vehicle. Think of it like a fitness tracker, but for your car. Instead of counting your steps, it counts your hard brakes, your sudden accelerations, the times you drive late at night, and how many miles you cover. Initially, this was clunky. Insurance companies would mail you a little plug-in device that you'd stick into your car's diagnostic port. It was an optional program, often for a small discount, but it was still tied to their old, broken system. It was a digital patch on an analog tire. But then, 2 things happened that changed everything. First, smartphones became ubiquitous. Suddenly, almost every driver in America was carrying a powerful computer in their pocket, complete with GPS and accelerometers. All the sensors needed to track driving behavior without any clunky hardware. Second, a group of tech entrepreneurs looked at the bloated, unfair insurance industry and saw a massive opportunity. They asked a simple question: what if we built an insurance company from the ground up, based entirely on telematics? What if we didn't just offer a discount for good driving, but made good driving the foundation of our entire business model? And that is the origin story of Root. Founded in 2015, they weren't an insurance company that decided to use tech. They were a tech company that decided to sell insurance. Their entire philosophy was to flip the old model on its head. Instead of signing you up and then maybe giving you a discount later, Root makes you prove you're a good driver first. They do this through their mandatory test drive, a period of several weeks where the Root app on your phone runs in the background, silently watching, analyzing, and scoring your every move behind the wheel. They monitor your braking. Are you slamming on the brakes at the last second? Or are you braking smoothly and anticipating traffic? They monitor your speed. Are you consistently respecting the speed limit? They monitor your turns. Are you taking corners at a safe speed? Or are you whipping around them like you're in a car chase? They even monitor your focus. The app can use the sensors in your phone to detect if you're constantly picking it up and tapping on the screen while driving, a huge indicator of distracted driving. Based on this data, they generate a driving score. And here's the most controversial part of their entire model. If your score is good enough, they'll offer you a quote. A quote they claim is fundamentally fair because it's based on your actions, not your demographics. But if your score is too low, they'll refuse to insure you at all. They will literally deny you service. Root's entire premise is that they are an exclusive club for good drivers only. By kicking out all the risky, accident-prone drivers that other companies are forced to insure, they lower their overall risk, which means they have fewer claims to pay out. In theory, they pass those savings directly on to their good driver customers. It sounds perfect, right? A meritocracy for the road. The safe drivers band together, get cheap rates, and leave the reckless drivers to fend for themselves with the old-school carriers. It's a powerful, compelling narrative. It's David versus the Goliaths of the insurance world. But as we're about to see, the reality of how this system works day to day is far more complicated, and for some drivers it can be deeply flawed. The data they collect is vast, the algorithm is a black box, and what Root considers good driving might not be what you expect. So let's peel back the first layer and look at what really happens when you download that app and agree to let Root watch your every move. The moment you hit allow on those location and motion tracking permissions, your audition begins. It's called the Root test drive, and it typically lasts anywhere from 2 to 4 weeks. But this isn't like a test drive at a car dealership where you get to feel out the vehicle. Oh no, here the vehicle is you and the app is feeling you out. For the next several hundred miles, your phone transforms into a silent, ever-present driving instructor, sitting in your passenger seat, judging your every move without saying a word. So what is this all-seeing eye actually looking for? You might think it's just about speeding, but that's barely scratching the surface. Root's algorithm is built on a foundation of telematics, a fancy word for using technology to track a moving object. In this case, that object is your car, with your phone acting as the informant. It's primarily focused on 4 key behaviors, the 4 horsemen of the insurance risk apocalypse: hard braking, aggressive turning, distracted driving, and the time of day you're on the road. Let's start with hard braking. We've all been there. The light turns yellow, you misjudge the timing, and you have to stop a little more abruptly than you'd like. Or a car in front of you suddenly slams on its brakes to avoid a squirrel. To you, that's just defensive driving. It's being a responsible human being. To the Root algorithm, which lacks all human context, it's a red flag. A hard brake is registered by the accelerometer in your phone, detecting a rapid deceleration, a sudden, sharp change in your forward momentum. The problem is, the definition of a hard brake is incredibly subjective and dependent on your environment. A sudden stop in a 25-mile-per-hour school zone is very different from a sudden stop on a 70-mile-per-hour interstate. A daily commute in the stop-and-go chaos of Los Angeles or New York City is going to be littered with these events. You're constantly reacting to other drivers cutting you off, to pedestrians stepping into the crosswalk. A driver in rural Wyoming might go a month without a single hard braking event. Does that make the city driver inherently worse or riskier? In the eyes of this specific algorithm, the answer is often a resounding yes. You're not being judged on why you braked hard, you're just being judged on the fact that you did. The algorithm doesn't see the child's ball that rolled into the street. It just sees a negative data point that gets logged against your final score. Next up is aggressive turning. This one is even more subtle. The app is using your phone's gyroscope and accelerometer to measure lateral g-forces. Think about that feeling of being pushed to the side of your seat when you take a corner a little too quickly. That's what it's measuring. Are you whipping around corners like you're in a chase scene? Or are you making smooth, deliberate turns? Again, context is king. Taking an on-ramp to merge with highway traffic requires a certain level of acceleration and a tighter turn than making a right at a suburban 4-way stop. The app doesn't necessarily know the difference. It just knows the forces exerted on the phone. So that spirited drive on a winding country road, Something you might consider a skillful and enjoyable part of driving could be interpreted by the app as a pattern of reckless, aggressive behavior. You're being penalized not for being unsafe, but for deviating from a perfectly smooth, computer-approved arc. But the real heavyweight champion in this arena, the metric that causes the most anxiety and confusion, is distracted driving. This is Root's big selling point. They want to weed out the texters, the scrollers, the people driving with their eyes on a screen instead of the road. And that's a noble goal. But how do they do it? The app monitors your phone's motion and your interaction with the screen while the car is in motion. It's looking for the telltale signs. The phone being picked up, the screen being tapped, the distinct movements associated with typing. Now here's where it gets incredibly messy. What if you use your phone as your GPS? For millions of us, our phone is our navigation system, mounted safely on the dashboard or in a cradle. You might need to tap the screen to dismiss a notification or confirm a route. Is that distracted driving? According to many users' experiences, yes, it can be. The app can struggle to differentiate between handheld use, which is incredibly dangerous, and interacting with a mounted device. And it gets even more complicated. What if you're not the one driving? What if you're the passenger in your own car, using your phone while your spouse drives? Or what if you're on a bus, or in an Uber, or on a train? Your phone's GPS knows you're in a moving vehicle, and the accelerometer knows the phone is being handled. This has been a massive point of contention. The app has features to try and determine if you're the driver, but it's not foolproof. It looks at the consistency of your routes and driving style, but errors happen. You could be a passenger on a jerky city bus scrolling through social media, and the app could be logging that entire trip as you driving poorly and being dangerously distracted. You have the option to go into the app later and tell it you weren't driving for a specific trip, but how many people are diligent enough to do that every single time? How many even know they need to? You're essentially guilty until proven innocent, and it's on you to constantly police your own data. Finally, there's the timekeeper. When you drive is just as important as how you drive. The algorithm operates on pure statistics, and statistically, driving late at night, especially between midnight and 4 a.m., is riskier. There are more tired drivers, more impaired drivers, and accidents are often more severe. So, if you're a third-shift worker, a nurse, a factory worker, a first responder, your very livelihood puts you in a higher risk category. Even if you drive like a saint, with zero hard brakes, gentle turns, and your phone locked in the glove box, the simple act of driving home at 3 a.m. will count against you. The same goes for rush hour. Driving in dense, heavy traffic, even if you're crawling along at 10 miles an hour, is statistically more likely to result in a fender bender than driving on an open road in the middle of the afternoon. You are being judged not just on your personal skill, but on the collective risk of everyone else around you. Throughout this 2 to 4 week audition, your phone is working overtime. All this GPS tracking and sensor monitoring puts a significant drain on your phone's battery. Many users report needing to keep their phone plugged in constantly during the test drive period just to make it through the day. It's also using your cellular data to upload all this information back to Root servers. If you're not on an unlimited plan, that's a hidden cost to this free test drive. At the end of it all, you don't get a detailed report card. You don't see a list of your 10 worst braking events or the 3 trips where you took a corner too fast. You just get a score. A single solitary number from 1 to 10 that encapsulates your entire driving identity, at least according to Root. And if that score isn't good enough, you're simply denied a quote. No explanation, no chance for an appeal. Just a digital door slammed in your face. This black box approach is the fundamental frustration. You're asked to put your trust in an algorithm to judge you fairly, but you're given almost zero insight into how it reaches its conclusions. The system is designed to be opaque, but the questions it raises are crystal clear. Just how accurate is this technology, really? Can a smartphone in your cup holder truly understand the nuances of the road and separate the good drivers from the bad? Or is it just a crude tool, making sweeping generalizations that could unfairly penalize safe, responsible people? Because if the app can't even reliably tell whether you're driving the car or just sitting in the passenger seat, what other mistakes might it be making? Let's talk about those other mistakes. Let's pull back the curtain on the 3 main ingredients in Root's secret sauce: hard braking, fast turning, and time of day. On the surface, these seem like perfectly reasonable things to measure. A driver who is constantly slamming on their brakes and taking corners on 2 wheels is probably a risky driver, right? And someone driving at 2 a.m. is statistically more likely to be involved in an accident than someone driving at 2 p.m. It all makes sense. Until it doesn't. The fundamental, almost fatal flaw in this logic is that the app has absolutely zero understanding of context. It's a data collector, not a thinking machine. It sees the what, but it is completely blind to the why. And in driving, the why is everything. Let's imagine a driver. We'll call him Mark. Mark is a 35-year-old paramedic who lives in a dense, bustling city like Boston or Philadelphia. He's arguably one of the safest drivers you could ever meet. His job requires him to navigate chaos under extreme pressure. He's seen the horrific consequences of bad driving firsthand, so he is hypervigilant, defensive, and always aware of his surroundings. He's exactly the kind of customer an insurance company should be fighting to get. So Mark downloads the Root app, excited by the promise of a rate based on his actual skill. The test drive begins. On day 1, Mark is driving down a busy street going the speed limit. Suddenly, a kid on a skateboard darts out from between two parked cars. Mark's paramedic training kicks in. His eyes were already scanning. He saw the potential for danger, and his foot is already hovering over the brake. He brakes hard but smoothly, stopping a full car length from the kid, who barely even noticed. Mark's heart is pounding, but he avoided a tragedy. He did everything perfectly. But what does the Root app see? It doesn't see the kid. It doesn't see the parked cars. It doesn't see Mark's incredible reaction time and situational awareness. It just sees one data point: a rapid deceleration from 25 miles per hour to 0. It chalks up a big fat red flag. Heartbreaking incident. Strike 1. Later that week, Mark is trying to make a left turn at an intersection with no traffic light. It's rush hour. The cross traffic is relentless. He waits patiently for a gap. Finally, a small one opens up. He knows he has to accelerate briskly through the turn to avoid getting T-boned or forcing the oncoming car to slam on its brakes. He executes the turn perfectly, slotting into traffic without a hitch. It was the only safe and courteous way to make that turn. But the app, using the phone's accelerometer and gyroscope, registers the G-forces. It doesn't see the oncoming traffic. It doesn't understand the concept of a busy intersection. It just sees a high rate of angular velocity. Another red flag. Aggressive turning. Strike 2. Finally, let's talk about time of day. Mark, being a paramedic, works irregular shifts. A few nights during his 2-week test drive, he gets off work at 3 a.m. The roads are practically deserted. He's stone-cold sober, wide awake, and driving home cautiously. For him, this is the safest possible time to be on the road. There's no traffic, no pedestrians, no chaos. But Root's algorithm doesn't know Mark is a paramedic coming home from a 12-hour shift saving lives. It only knows what its aggregate data says. Driving between midnight and 4 a.m. is a high-risk activity. It's associated with drowsy driving and drunk driving. So for every minute Mark drives home late at night, his risk score ticks up. He is being penalized for the sins of other drivers, simply for being on the road at the wrong time. Strike 3. At the end of his 2-week test drive, Mark, one of the safest and most skilled drivers in his city, gets his result from Root. Unfortunately, based on your test drive, we are unable to offer you a quote at this time. This isn't just a hypothetical. This is the lived experience of countless drivers who have tried Root. Go look at the reviews on the Better Business Bureau website or on Reddit threads. You will see this exact story told over and over again. A user from Chicago wrote, "I got dinged for hard braking when a taxi cut me off. What was I supposed to do, hit him?" Another from Los Angeles said, "They count any turn you have to accelerate into as a fast turn. That's literally how you merge onto a freeway here." This reveals the uncomfortable truth about Root's telematics. It's not really measuring how safe of a driver you are. It's measuring how chaotic your driving environment is. Mark wasn't penalized for being a bad driver. He was penalized for being a city driver. His risky maneuvers were actually textbook defensive driving techniques, required to survive in a dense urban setting. Now let's imagine another driver. We'll call her Susan. Susan lives in a quiet rural town in Iowa. The roads are wide, straight, and empty. She rarely encounters traffic. She never has to parallel park. The most unpredictable thing she might encounter is a deer. During her test drive, Susan is a much less attentive driver than Mark. She checks her texts at stop signs. She's a little slow to react to a yellow light. She sometimes drifts in her lane while changing the radio station. But because her environment is so simple, she never has to brake hard. She never has to make a sharp, accelerated turn. She's in bed by 10 p.m. every night. The Root app doesn't see her lack of attention. It can't measure distraction. It only sees smooth acceleration, gentle braking, and wide, slow turns. At the end of her test drive, Root offers her a fantastic rate. Who is the better driver? Marked by a country mile. But who gets the reward? Susan. This is the fundamental problem. The system is inherently biased. It favors drivers in low-density, predictable environments and punishes skilled drivers in complex, unpredictable ones. It's less of a driver test and more of a zip code test. Root claims to be disrupting the industry by getting rid of outdated factors like location, but in reality, they've just created a high-tech proxy for it. Instead of judging you by your address, they judge you by the driving conditions at your address. The result is the same. An urban driver, even a great one, is seen as a higher risk. So the app is a master at tracking how you move your car, the braking, the turning, the speed. But it's completely blind to the most important factor of all: why you're moving it that way. It sees the action, but it has zero comprehension of the intention or the context behind it. And that fundamental flaw, that inability to distinguish between reckless driving and responsible defensive driving, leads to an even bigger, more startling problem with their entire business model. This bigger, more startling problem is what I call the good driver paradox. Root's entire marketing pitch, their entire reason for existing, is that they only insure good drivers. By weeding out the bad ones, they can offer lower rates to the good ones because their overall risk pool is safer. On the surface, it sounds brilliant. It's a revolutionary idea. But it all hinges on one single critical assumption: that their telematics, their app, can accurately tell the difference between a good driver and a bad one. And as we've just established, it can't. It can't understand context. And because of that, the system doesn't just fail occasionally, it actively and systematically punishes the very people it claims to reward, the safest, most defensive drivers on the road. Let's imagine two drivers. We'll call them Defensive Dave and Oblivious Oliver. Defensive Dave is the kind of driver you want to be. He's constantly scanning the road, checking his mirrors, anticipating the actions of other drivers. He leaves plenty of following distance. He's the epitome of a safe driver. Now let's put Dave in a typical American city during rush hour. He's driving along, maintaining a safe speed, when suddenly, the car in front of him slams on its brakes because they almost missed their turn. Dave, being the attentive driver he is, reacts instantly. He hits his brakes hard to avoid a collision. He successfully prevents an accident. A few minutes later, he's on the freeway. He needs to merge. He sees a small gap, but he also sees a semi-truck in his rearview mirror coming up fast. He knows that merging slowly would be incredibly dangerous, so he accelerates briskly and safely into the gap, matching the flow of traffic. Later on his drive, he's approaching an intersection. The light is green, but out of the corner of his eye, he sees a car on the cross street that looks like it's not going to stop for its red light. Dave, anticipating the danger, eases off the gas and covers his brake, ready to react. The car blows through the red light, right where Dave would have been. He avoided a catastrophic T-bone collision. Now let's look at Oblivious Oliver. Oliver isn't malicious. He's just not paying much attention. He's listening to a podcast, thinking about what he's going to have for dinner. He drives at a consistent speed, rarely deviating. He doesn't brake hard because he leaves a huge 10-car length gap in front of him, causing other more aggressive drivers to constantly cut in and out. He accelerates from a stoplight so slowly that the people behind him get frustrated. He merges onto the freeway at 40 miles per hour, forcing other cars to slam on their brakes and swerve around him. But here's the key: by pure dumb luck during his test drive, nobody cuts him off. He doesn't encounter a distracted driver who runs a red light. No deer jumps out in front of him. His journey is, by chance, completely uneventful. Now let's ask the crucial question. How does the Root app see these two drivers? It looks at Defensive Dave's data and sees multiple instances of hard braking. It sees rapid acceleration, sees fluctuations in his speed. The algorithm doesn't see the car that cut him off. It doesn't see the semi-truck in the rearview mirror. It doesn't see the driver who ran the red light. It just sees a collection of data points that, according to its programming, correlate with risky, aggressive driving. So the app flags Dave as a bad driver. He gets a high-risk score and is either denied coverage or quoted a ridiculously high premium. Then the app looks at Oblivious Oliver's data. It sees smooth, gentle acceleration. It sees no hard braking events. It sees a consistent speed. The algorithm doesn't see the chaos he's causing in his wake. It doesn't see the other drivers he's forcing into dangerous situations. It doesn't see that his lack of awareness makes him a liability. It only sees a clean, smooth data set, and it concludes that Oliver is a good driver. He gets a low-risk score and is offered a fantastic rate. This is the good driver paradox. Root System, in its quest for data-driven objectivity, has created a reality where the responsible, accident-avoiding driver is penalized, and the lucky, oblivious driver is rewarded. It mistakes reaction for aggression. It mistakes caution for indecisiveness. It mistakes the symptoms of a dangerous driving environment for the cause. The single biggest complaint you will find from people who have done the root test drive is about the hard-braking penalty. And it makes perfect sense. Who brakes hard? People who are trying to avoid an accident. People who are reacting to the unpredictable and often terrible driving of others. A child runs into the street after a ball. The car in front of you reveals a massive pothole at the last second. A traffic light turns from green to red with almost no yellow. These are not the actions of a bad driver. These are the reactions of a good one. A truly bad driver, one who is tailgating and not paying attention, wouldn't have time to brake hard. They would just crash. The same logic applies to other metrics. Sharp cornering? Maybe you were swerving to avoid a piece of debris in the road. Rapid acceleration? Maybe you were getting out of another vehicle's blind spot on the highway, a textbook defensive driving maneuver. The app has no way of knowing. It lives in a world of pure data, devoid of the messy, unpredictable context of real-world driving. And this isn't just a theoretical problem. It has real-world consequences for their customers and for their business. Think about it. If the algorithm is systematically filtering out some of the most offensive drivers and rewarding some of the most oblivious ones, what does that do to their vaunted safe driver risk pool? Contaminates it. They think they're building a low-risk portfolio of elite drivers, but they could actually be building a portfolio of lucky drivers whose luck is bound to run out. This fundamental flaw creates a cascade of other problems that ripple through the entire customer experience. Because if the initial assessment of you as a driver is based on flawed, context-less data, what do you think happens when it comes time to set your final premium? What happens 6 months down the line when it's time for renewal, and the app has been watching your every move, judging every single defensive maneuver you've had to make? The initial quote you get, the one that might look so appealing, is often just the beginning of the story. The company continues to monitor you, and that monitoring is based on the exact same flawed logic. Every time you have to brake hard to avoid someone who cut you off, a little tick mark goes against your name in their system. Every time you accelerate to merge safely, another demerit. Over time, these marks accumulate. The algorithm, which once saw you as a good driver, can slowly begin to reclassify you, starts to see you as a growing risk. And so, many customers report a bait-and-switch scenario. They get a fantastic rate for the first 6 months. They're thrilled. They tell their friends. But then the renewal comes. And suddenly, their premium has jumped by 30, 50, even 100% or more, with no accidents, no tickets, no claims. Nothing has changed in their official driving record. The only thing that has changed is Root's internal, secret score. A score based on data that can't tell the difference between causing a problem and avoiding one. This isn't just about getting a good rate. This goes to the very heart of the promise Root makes to its customers. The promise is one of fairness. You are a good driver. You shouldn't have to subsidize bad drivers. We will judge you on your driving. But if the judge is blind to context, is it really a fair trial? If the system punishes you for avoiding the very accidents that insurance is supposed to protect you from, is the system really working? This is the critical internal contradiction at the heart of Root's model. It's a brilliant idea built on a foundation of dangerously flawed assumptions, leading to a system that can easily turn on the very customers it was designed to attract. So let's pull back the curtain and see what this contradiction looks like in the real world for a real customer. Imagine this: you've downloaded the Root app. You do the test drive, you're careful, you avoid hard braking, you take corners smoothly. You feel like you're acing a test. And then the quote arrives. It's fantastic. It's $100, maybe $200 less per 6-month term than your current legacy insurer. You feel validated. You are a good driver, and finally a company recognizes it. You switch. You pay your first premium, feeling smart, feeling like you've beaten the system. This is the honeymoon period. This is the promise of Root fulfilled. For the next 6 months, everything is great. The app works, you have your digital insurance card, you feel modern and savvy. You might even recommend it to a few friends. You've forgotten about the app tracking you in the background. It's just another piece of software on your phone. Then the renewal notice comes. You open the email or the app, expecting that same great rate, maybe even a small decrease for your continued good driving. and your jaw hits the floor. Your rate hasn't just gone up by a few dollars to account for inflation. It's doubled, maybe even tripled. You're in shock. You haven't had a ticket, no accidents, no claims. In your mind, nothing has changed. You're the same safe driver you were 6 months ago. So what on earth happened? You've just slammed headfirst into the brutal reality of Root's business model. The initial quote, that amazing number that got you to sign up, wasn't a promise. It was an estimate. It was an educated guess based on a few weeks of data. It was the marketing budget at work. But for the last 6 months, Root hasn't stopped watching. Its algorithm has been silently collecting thousands upon thousands of data points about your every move. And its conclusion 6 months later is that you are a much bigger risk than it originally thought. Why? You'll probably never know for sure. And this is the single most frustrating aspect for many former Root customers. The utter lack of transparency. The algorithm is a black box. You can't call up a customer service representative and have them explain, "Well, Bob, on May 17th, you accelerated a little too quickly from a stoplight, and we noticed you tend to drive between 8 and 9 p.m., which our data shows is a higher risk time." That conversation will never happen. All you get is the final verdict delivered by a line of code with no room for appeal. Your risk profile has been reassessed. End of story. The problem is, the technology isn't foolproof. It's clever, but it's not intelligent. It lacks context. Let's say you take the bus to work one day because your car is in the shop. Your phone is in your pocket. The bus driver is a professional, but they're driving a 15-ton vehicle. They brake harder, they accelerate differently, they take wider turns. Root's app, in many reported cases, doesn't know you're on a bus. It just knows its host, your phone, is experiencing erratic G-forces and movement patterns. It flags this as risky driving behavior. Your behavior. Or what about this? You're the passenger in a friend's car. Your friend is a terrible driver. They tailgate, they speed, they slam on the brakes. The app, nestled in your purse or pocket, is logging every single aggressive maneuver. It's not your friend's driving record being dinged. It's yours. Root claims their technology can differentiate between driving and being a passenger, but countless customer complaints suggest this system is, at best, imperfect. Every Uber ride, every trip with a spouse, becomes a potential liability against your own insurance score. Even something as simple as where you place your phone in the car can have an impact. If your phone slides off the passenger seat and tumbles into the footwell during a turn, the accelerometer registers a sudden, chaotic event. To the algorithm, that could look like a swerve or a near accident. It's data, and all data gets fed into the machine that determines how much you pay. You are being judged by a system that has immense power but zero understanding of nuance. It's a scorekeeper that can't tell the difference between the player and the spectator. This brings us to the even bigger, more unsettling question. What is Root actually doing with all this data? We're not just talking about hard brakes and speed. The app, by necessity, requires access to your phone's most sensitive sensors. The GPS knows where you live, where you work, where you shop, what doctors you visit, and how often you go to a bar. The accelerometer and gyroscope are so precise they can create a detailed profile of your physical activities. Are you a runner? Do you walk through a bad neighborhood? Are you mostly sedentary? All of this information is being collected 24/7. Root's privacy policy states they use this data to calculate your rate and for other business purposes. That's a very, very broad term. In the world of big data, information is the most valuable currency there is. This data can be anonymized and sold to city planners, to marketing companies, to hedge funds looking for economic indicators. Your daily patterns, your movements, your habits, they are all packaged and potentially monetized. You came for a cheap insurance quote, but what you're actually paying with is a complete, unvarnished record of your life. And remember, that discount can vanish at your first renewal, but Root still has your data. The trade might not be worth it in the long run. Ultimately, these massive rate hikes, the black box algorithm, the data privacy concerns, they all trace back to that one, inescapable fact we discussed earlier: Root has to make money. The company spent years losing billions of dollars to acquire customers with those ultra-low introductory rates. They were bleeding cash. Now the pressure from Wall Street and their investors is immense. They have to get profitable, and they have to do it fast. So, the algorithm is no longer tuned just for fairness. It's tuned for survival. It's being tightened and optimized to identify and squeeze every last drop of profit from its customer base. That means it's become hypersensitive to any indicator of risk, real or imagined. It has to be, because the company can no longer afford to take chances. The system that was marketed as your friend, the one that would finally judge you on your own merits, has become a ruthless gatekeeper. Its primary objective is no longer to give good drivers a deal. Its primary objective is to protect Root's bottom line. Any driver who presents even a hint of future risk, or who lives in an area where claim costs are rising, will see their rates skyrocket. They are being priced out. It's not personal, it's just business. A very cold, data-driven, and unforgiving business. This aggressive pricing strategy is a desperate attempt to fix the leaks in their sinking ship. But it raises a terrifying question. If this is how they treat you when all you are is a monthly premium payment, what happens when you actually cost them money? What is it like to file a claim with a company that is fighting for its very financial survival? Let me paint you a picture. You're driving home from work, maybe listening to a podcast, thinking about what's for dinner. Suddenly, you hear the screech of tires and feel a sickening jolt. Someone just ran a stop sign and T-boned your car. Your heart is pounding, but you're okay. The other driver is okay. But your car, your reliable, paid-off sedan, is a wreck. The whole passenger side is caved in. After the police report is filed and the tow truck is called, you take a deep breath and do what you're supposed to do. You open the Root app on your phone. The same app that tracked your every turn for a month. The same app that rewarded you with that incredibly low premium. It's sleek, it's modern. You tap through the menus to file a claim. Surprisingly easy. You upload photos of the damage, the police report, the other driver's information. Within an hour, you get an automated text message. We've received your claim and an adjuster will be in contact within 24 to 48 hours. You feel a sense of relief. This is what you pay for. This is the promise of modern tech-driven insurance. But then 48 hours go by. Silence. You send a message through the app. No reply. You call the main number and navigate an automated phone tree, only to be told that your assigned adjuster, let's call her Jessica, is unavailable but will call you back. She doesn't. Another day goes by. You're now paying for a rental car out of pocket because you can't get approval from Root. You call again. This time, you get a different person who promises to leave an urgent message for Jessica. The call never comes. This isn't just a story. This is the beginning of a nightmare described in hundreds upon hundreds of customer complaints filed with the Better Business Bureau and posted on consumer forums across the internet. The initial, slick, app-based experience dissolves into a black hole of communication. You, the customer, the one who was praised for your safe driving, are now trapped in a labyrinth of unreturned calls and unanswered emails. Finally, after a week of hounding them, you get an email. Not a call, an email. It's from your adjuster, Jessica. It's brief and contains a preliminary estimate for the repairs. The number seems shockingly low. You take it to the body shop your family has trusted for years. The mechanic takes one look at it and laughs. He tells you the estimate from Root wouldn't even cover the cost of the parts, let alone the labor. They've specified used or aftermarket parts, and their labor rate is about 30% lower than the standard for your area. Now the real battle begins. You're not just dealing with the stress of being in an accident. You're now forced to become an unpaid project manager, a negotiator, and an insurance expert, all while fighting your own insurance company. You forward the body shop's much higher, more realistic estimate to Jessica. Days pass. Nothing. You email. You're told she's reviewing it. You explain that you're bleeding money on a rental car. The person on the phone says they can't approve the rental until the repair estimate is approved. It's a classic catch-22. This is the moment of truth for any insurance company, and for Root, it appears to be the moment the entire business model reveals its fundamental flaw. Remember, Root's strategy is to attract the absolute lowest risk drivers and offer them rock-bottom prices. The entire financial structure is predicated on the vast majority of its customers not filing claims. They are betting on you being a perfect driver forever. The moment you have an accident, you are no longer a profitable asset. You have become a liability. You have flipped from the income side of the ledger to the expense side. And the company's internal mechanisms seem designed to minimize that expense at all costs, even at the cost of your sanity. Weeks can turn into a month. In many documented cases, customers report their cars sitting in a repair shop, collecting dust and storage fees, while Root and the shop go back and forth, haggling over every single line item. The company that used cutting-edge technology to court you now uses old-school delay tactics to wear you down. They're betting that you'll eventually give up, that you'll accept the lowball offer, pay the difference out of pocket, or let the shop use inferior parts just to get your car back and end the ordeal. And what if your car is declared a total loss? That's a whole other level of frustration. Customers report Root offering settlement values that are thousands of dollars below the Kelley Blue Book or not a value. They use third-party valuation companies that seem to find the cheapest possible comparisons from hundreds of miles away to justify their low offer. So now, not only are you without a car, but the check they're offering isn't even enough to buy a comparable vehicle, let alone cover the loan you might still have on the wrecked one. You are left worse off financially than you were the moment before the accident, which is the exact opposite of what insurance is for. This isn't just a few disgruntled customers. The National Association of Insurance Commissioners, or NAIC, tracks consumer complaints against insurance companies. A company's complaint index is a way to measure this. An index of 1.00 is the national median. Anything above 1.00 means the company gets more complaints than average for its size. For years, Root's complaint index has been significantly higher than 1.00, often many times higher. For their private passenger auto insurance, it has frequently been in the 3, 4, or even 5 range, meaning they receive 3, 4, or 5 times the number of complaints expected for an insurer of their market share. The vast majority of these complaints center on the claims process: delays, unsatisfactory offers, and denial of claims. The pattern is undeniable. The very technology that makes Root seem so appealing on the front end, the app, the lack of agents, the streamlined process, becomes a massive liability on the back end. There's no local agent to go to, no one to hold accountable. You're just a claim number in a system, and the person responsible for that number is an overworked, undersupported adjuster who is likely incentivized to close claims for the lowest possible amount. This is the hidden cost of that unbelievably cheap premium. It's a gamble. You are betting that you will never ever need them. But accidents happen even to the best drivers. A deer jumps out in front of you. Someone slides on ice and hits you. Another driver texts their way through a red light. And in that moment, when you need the protection you've paid for, you may discover that your insurance company views you not as a customer to be helped, but as a financial problem to be managed. The psychological toll is immense. It's the feeling of being utterly powerless. It's the anger of being ignored. It's the financial strain of unexpected out-of-pocket costs. It's the betrayal of a company you trusted to have your back. They used your own data to judge you as worthy of their best rate. And then when misfortune strikes, that judgment seems to evaporate, replaced by a cold, frustrating, and financially painful wall of resistance. So while Root's promise of rewarding good drivers is compelling, the evidence strongly suggests that their definition of a good driver is one who never costs them a dime. The moment you do, the relationship changes. The friendly, tech-forward facade crumbles, revealing a desperate struggle to control costs in a business model that is perpetually bleeding cash. And the person caught in the middle of that struggle is you. But this claims process is only one half of the customer experience equation. The other half is what happens to your rates after the honeymoon period is over, even if you never file a claim at all. And that's where the other shoe drops. The first 6 months are bliss. You get that incredible rate, you drive like a saint, you check the app, and you see that perfect driving score. You feel like you've finally beaten the system. You found the one insurance company that actually rewards you for being a good driver, just like they promised. You tell your friends, your family. You feel smart. Then, about a month before your policy is set to renew, an email lands in your inbox. You open it, expecting to see that same beautiful low number. But it's not. It's not even close. Your rate hasn't just gone up by a few dollars. It's jumped 40%, 60%. In some cases, people report their rates have doubled or even tripled. And you're left staring at the screen, completely bewildered. You haven't had an accident. You haven't gotten a single ticket. Your driving score in the app is still a pristine 10 out of 10. You did everything they asked. You let them track your every move for months. You proved you were the ideal customer. So why are they treating you like you just totaled a Lamborghini? This is, without a doubt, the single biggest complaint leveled against Root Insurance. It's a pattern reported by thousands of former customers online, from Reddit to the Better Business Bureau. The story is almost always the same. An amazing introductory rate followed by a jaw-dropping renewal increase, with no apparent justification. Feels like a classic bait and switch. And to understand why this happens, we have to pull back the curtain and look at the fundamental business model of an insurance disruptor like Root. First, let's talk about the bait. That initial low price you get is what's known in the industry as a teaser rate or an acquisition rate. Its primary purpose isn't to accurately reflect your long-term risk. Its purpose is to get you to switch. Think about it. The auto insurance market is incredibly competitive. Geico, Progressive, State Farm, they spend billions of dollars a year on advertising just to stay in your mind. For a new company like Root to break through that noise, they can't just be a little bit cheaper. They have to be dramatically, undeniably cheaper. They have to give you a number so good that you're willing to go through the hassle of switching providers and the discomfort of installing a tracking app on your phone. This low price is a marketing cost. They are essentially paying to acquire you as a customer, and more importantly, to acquire your driving data. They are willing to lose money on you for the first 6 months because they are playing a long-term game. They're betting that once you're in their system, you'll be too busy to shop around again when the renewal comes. They're banking on inertia. They hook you with a price you can't refuse, and then hope you'll just sigh and accept the real price when it's revealed 6 months later. But that's only part of the story. It's not just a simple marketing gimmick. The second and more critical reason for these massive rate hikes has to do with a concept called the loss ratio. Now, stick with me because understanding this is the key to understanding the entire insurance industry. A loss ratio is simply the amount of money an insurance company pays out in claims compared to the amount of money it brings in from premiums. So, if a company collects $1 million in premiums and pays out $800,000 in claims, its loss ratio is 80%. A healthy, sustainable loss ratio is what keeps an insurance company in business. When Root first launched, they had a revolutionary idea. Use telematics to identify and insure only the best drivers. In theory, this should lead to a super low loss ratio because good drivers have fewer accidents. With a low loss ratio, they could afford to offer incredibly low prices and still be profitable. It was a beautiful theory. But reality is a lot messier than theory. In the beginning, Root's algorithm was a black box. They needed a massive amount of real-world driving data to refine it. And to get that data, they needed customers. Lots of them. So they set their initial prices extremely low to attract a flood of drivers. The problem is, they may have priced their policies too low. They underestimated the actual cost of claims, even from a pool of good drivers. A good driver can still get hit by a bad driver. A perfect driver's car can still be crushed by a falling tree branch in a storm. A careful driver can still have their catalytic converter stolen. So, for the first few years, Root was bleeding money. Their loss ratios were dangerously high. They were paying out far more in claims than they were collecting in premiums. An analysis by the insurance industry publication, The Zebra, noted that in 2020, Root's loss ratio was a staggering 99%. That is completely unsustainable. It's like a restaurant selling a $10 steak for $2. You'll have a line out the door, but you'll be bankrupt in a month. To fix this, the company had to make a drastic correction. They had to raise their rates. Not just for new customers but for their existing customers at renewal. They had to bring their prices in line with the actual risk they were taking on. This is why your perfect driving record suddenly doesn't matter as much as you think it should. The rate increase you're seeing isn't necessarily personal. It's not a punishment for a sudden turn you made last Tuesday. It's a company-wide market correction. You, the loyal perfect driver, are essentially paying for the company's early miscalculations. You're subsidizing the fact that their initial business model was too optimistic. Insurance companies can't just change prices whenever they feel like it. They have to file their proposed rate changes with the Department of Insurance in each state they operate in. And if you look at public records, you can see Root filing for significant, often double-digit, rate increases in states all across the country as they scrambled to get their loss ratio under control. This is compounded by a third factor. The entire auto industry is facing massive inflation. The cost of everything is going up. The price of new and used cars is at an all-time high. The technology in modern vehicles, the sensors, the cameras, the computers, makes even minor fender benders incredibly expensive to repair. A simple bumper replacement that used to cost a few $100s can now cost thousands because of the need to recalibrate safety systems. Add in rising medical costs and litigation expenses, and every single insurance company is being forced to raise its rates. But here's the crucial difference. When a traditional carrier like State Farm raises your rate by 8%, it's annoying, but it feels somewhat expected. When Root, a company that built its entire identity on being different and fair, jacks up your rate by 80%, it feels like a profound betrayal. It violates the core promise of their brand. The psychological contract they made with you was, let us track you, prove you're a safe driver, and we will give you a fair price based on how you drive. But when your renewal comes, you discover that your rate is also subject to their corporate profitability, their investor demands, their initial pricing errors, and broad market inflation. All the same factors used by the traditional companies they claim to be better than. The one factor that was supposed to be supreme, your driving, suddenly feels like it's been relegated to a minor variable in a much larger and more frustrating equation. So you're left holding a renewal notice that's double what you signed up for, feeling completely misled. It seems like you have two choices: swallow the massive increase and pay it, or go through the enormous hassle of shopping for insurance all over again. But what if there's a third option? What if the very data they collected on you, the data that proved you are an elite driver, could be used as your single greatest weapon? This weapon isn't a secret loophole. It's not a complicated legal maneuver. It's the scorecard, the very report card that Root so eagerly compiled on you. Every smooth stop, every gentle turn, every late-night trip you didn't take. It's all there, logged and quantified into a single undeniable score. A score that screams, "I am a low-risk, high-profit customer." Root used this data to give you a great initial rate, and now they're hoping you forget just how valuable that data truly is. They are counting on you to see that new, inflated premium and feel powerless, trapped between paying their price or starting the entire frustrating insurance shopping process from square one. But that data is your golden ticket. It's your verified, third-party audited resume for being an elite driver, and you're about to take it on the open market. Here's the battle plan. Step 1, you need to secure your asset. Open the Root app. Navigate through your profile or settings until you find your driver scorecard. It might be buried under driving score details or a similar menu. Find it, screenshot it, download it if you can. Get a clear, undeniable record of your performance. Look at that number. A 9 out of 10? A perfect 10? That number is now your ammunition. For months, you treated your phone like a carton of eggs. You drove like a student driver on their final exam, all to earn that score. Now it's time for that score to work for you. Step 2, the counteroffensive. You are going to take that scorecard and go directly to Root's biggest competitors: Progressive, Geico, State Farm, Allstate, every single major carrier. But you are not going to approach them like a typical customer. You are not just another name filling out an online form, getting a generic quote based on your age, your car, and your zip code. You are coming in with a completely different level of leverage. You are approaching them as a pre-qualified, certified, top-tier applicant, and you have the proof. Think about what these companies spend every single year. Billions, literally billions of dollars on advertising, all with one simple goal: to find safe drivers. They run goofy commercials, they sponsor sports stadiums, they flood your mailbox with junk mail, all in the desperate hope of attracting people exactly like you. They use complex algorithms to try and guess who the safe drivers are. It's the holy grail of their business model, and you are about to walk through their digital front door and hand it to them on a silver platter. So when you call them or use their online chat, you don't start with, "Hi, I'd like a quote." You start with a completely different script. You say, "Hello, my name is your name, and I'm currently insured with a telematics-based company. Over the last 6 months, I have maintained a verified driving score of 9.7 out of 10. I am statistically one of the safest drivers on the road, and I have the data to prove it. I am shopping for a new policy, and I'd like to know what your absolute best preferred rate is for a driver with my documented safety record." Do you see the shift? The entire power dynamic has just flipped. You're no longer a supplicant asking for a price. You are a valuable asset announcing your availability. You've immediately differentiated yourself from 99% of the other people getting quotes that day. You're not a risk to be calculated. You are an opportunity to be seized. You are telling them, your competitors have already done the hard work. They've monitored me, they've vetted me, and they've certified me as an elite driver. Now, what are you willing to pay for my business? But we can take this even deeper. This is where you turn their own systems to your advantage. Almost all the major carriers now have their own telematics programs. Progressive has Snapshot. State Farm has Drive Safe and Save. Allstate has DriveWise. They all promise a big discount if you let them monitor you for a few months and prove you're a safe driver. This is your checkmate move. In your conversation, you add this: "I see you offer a telematics program for a discount of up to 30 or 40%. I have already completed a multi-month telematics evaluation with my current carrier. Can we use my existing excellent driving data to bypass your trial period and apply my maximum safe driver discount to my quote from day one?" Let that sink in. You are asking them to give you their best possible discount immediately, without you having to go through another 3 to 6 months of being monitored. You're saving yourself the hassle, and you're saving them the uncertainty. For the insurance agent on the other end of the line, this is a dream scenario. They have a chance to acquire a proven, low-risk customer and steal them from a competitor, all in one phone call. Many will have the authority to do this, or at the very least, get you remarkably close to that maximum discount. You might have to email them the screenshot of your Root scorecard as proof, but that's a small price to pay for potentially hundreds of dollars in savings. We heard from one viewer, a guy named David from Ohio. Root quoted him a 45% increase at his 6-month renewal, despite his perfect 10 out of 10 score. He was furious. He did exactly this. He called 2 major national carriers. He led with his 10 out of 10 score. He asked them to apply the telematics discount up front. One carrier was hesitant, but the other one jumped at the chance. They gave him a policy that was not only cheaper than Root's new, inflated premium, but it was $10 a month cheaper than his original introductory rate with Root. He essentially used Root as a paid internship to prove his value, then took that experience and cashed it in for a better long-term job with a more stable company. This is the ultimate judo move. You are using the force of Root's own business model against them. Root's entire strategy is to spend money to acquire the driving data of good drivers. They pay for this with that initial super low honeymoon rate. They are making an investment. They are investing in creating a data profile that proves you're a safe driver. But once that renewal notice comes, you have the power to take that asset, the asset they paid to create, and sell it to the highest bidder. Your driving data is the product, and for the first time, you are the one in control of the sale. Once you have 1, 2, or even 3 competitive quotes from other carriers, you have your final choice. You can, if you want, go back to Root. You can call them and say, listen, you've raised my rates by 50%, yet my driving score is perfect. Progressive has offered me a policy for this much. Can you match it? Sometimes they might. A customer service agent might have some leeway to retain a customer, but frankly, don't count on it. Their business model is often built on those higher renewal rates, and they may be banking on the fact that most people won't go through the trouble you just did. The real victory isn't forcing Root to lower their price. The real victory is realizing you don't need them to. The data they collected set you free. It unshackled you from the endless cycle of shopping for insurance based on crude metrics from the past. You are no longer just a 35-year-old male in a Honda Civic. You are a 9.8 rated driver with 0 heartbreaking events in the last 180 days. And you have the paperwork to prove it. You've turned their own system against them. You've used their data to secure the best possible rate, whether it's with them or someone else. But this raises a much bigger, and frankly, a much more unsettling question. If your driving data is this valuable to other insurance companies, what else is it being used for? Who else is seeing it? And what happens when this data falls into the wrong hands? This is the digital ghost in the machine, a shadow profile of you that exists entirely outside of your control, bought and sold by companies you've never heard of, in industries that have nothing to do with car insurance. And your daily commute, your trip to the grocery store, your weekend getaway, it's all just fuel for this engine. Let's pull back the curtain on this, because what you find is often buried deep in the fine print of the privacy policy, the one we all scroll past and click agree to. Most privacy policies, including Root's, are written by lawyers for lawyers. They're designed to provide maximum legal protection for the company, not maximum transparency for you. You'll find vague, catch-all phrases like they may share your data with trusted third parties, service providers, or business partners. But who are these partners? The policy rarely gives you a list. It's a black box. You put your data in and you have no real say or knowledge of where it goes next. They might also mention sharing data for marketing and promotional purposes. This sounds harmless enough. You might think, okay, so I'll get a few more targeted ads. I can live with that. But it's so much bigger than that. When your driving data, your telematics, is packaged and sold, it doesn't travel alone. It gets bundled with other information. Your name, your age, your zip code. Data brokers, the multi-billion-dollar industry that operates in the shadows of the internet, take this packet of information and merge it with everything else they know about you. They buy your credit card purchase history, your public records, your social media activity, your web browsing history. They know what you buy, where you shop, what you like online, what articles you read, and now, thanks to telematics, they know where you go in the physical world. Every piece of data by itself might seem insignificant, but when you put it all together, a frighteningly detailed picture emerges. Let's create a hypothetical person. Let's call him John. John signs up for Root. The app tracks him driving to a high-end steakhouse twice a week. It tracks him driving to a private golf club every Saturday. It tracks him parking in the garage of an expensive downtown office building every weekday. The data broker buys this driving data. They already have John's credit card data, so they see he spends a lot at that steakhouse and pays membership dues to that club. They have his public property records, so they know he lives in an affluent suburb. What conclusions can be drawn? John has a high disposable income. He likely has a white-collar job. He enjoys luxury goods and services. Suddenly, John starts getting flooded with ads for Rolex watches, first-class airline tickets, and investment opportunities in exotic real estate. That's the most basic level. But let's take it a step further. What if the app tracks John driving to a cancer treatment center once a week? Or a therapist's office? Or a divorce lawyer? This is where it gets chilling. This intensely private, sensitive personal information can be inferred from your location data. An insurance company can't legally ask you if you have a specific health condition to set your rates. But what if a data broker can infer it from your driving habits and sell that risk profile to other types of insurance companies, like life or health insurers? They aren't buying your medical records, they're buying a lifestyle score that just so happens to be based on your visits to a medical facility. It's a loophole big enough to drive a truck through. Your driving score itself becomes just another metric in your overall consumer profile. Are you a risky driver who brakes hard and occasionally speeds? Data brokers and the algorithms they feed might correlate that with being a risky financial bet. It sounds like science fiction, but this is the reality of algorithmic decision-making. Lenders, credit agencies, and even potential employers are constantly looking for new data sets to more accurately predict human behavior. Could a poor driving score from an app you used 2 years ago be the reason you're denied a mortgage? Or offered a loan with a higher interest rate? The terrifying part is you would never know. You would just get the rejection or the bad offer, with no explanation that your driving habits were a contributing factor in an algorithm's decision. This data doesn't just predict your behavior, it can be used to manipulate it. Let's say your data shows you often drive by a particular fast food chain on your way home from work between 6 o'clock and 6:30 p.m. What happens when, at 5:55 p.m., a notification for a 2-for-1 burger deal at that exact location pops up on your phone? That's not a coincidence. It's a carefully timed piece of marketing designed to intercept you at a moment of potential weakness, using your own predictable habits against you. You are being steered, not just your car. And all of this assumes the data is being used by legitimate, if ethically questionable, corporations. Now we have to ask the question we ended the last part with. What happens when it falls into the wrong hands? Every single company that stores user data is a target for hackers. We see it in the headlines every single week. Equifax, T-Mobile, United Healthcare, behemoths with billion-dollar cybersecurity budgets, and they all get breached. Telematics insurance companies are no different. They are sitting on a treasure trove of uniquely sensitive data. What makes your driving data so much more dangerous than, say, your credit card number in a data breach? A credit card can be canceled. A password can be changed. But your patterns of life? You can't change those so easily. Imagine a hacker gets access to Root's user data. They don't just have a list of names and email addresses. They have a detailed, time-stamped, GPS-logged history of your physical movements. They know the exact address of where you live, because it's where your car is parked every night. They know where you work because it's where your car is parked every weekday. They know the route you take to your child's school or daycare. They know which nights you stay out late. They know when your house is most likely to be empty. This isn't just a privacy risk. It's a physical, real-world security risk. For the average person, it means a burglar could have a perfect schedule of when to rob your house. For someone with a public profile, it could mean a map for paparazzi or obsessed fans. In a domestic abuse situation, it could be a death sentence, allowing an abusive ex-partner to bypass a restraining order and know exactly where their victim is at all times. This is the ultimate, non-negotiable risk of handing over your location data 24/7. You are not just giving it to one company. You are broadcasting it to an entire ecosystem, and you have to trust that every single link in that long invisible chain, from the app developer to the cloud storage provider, to the third-party data analytics firm, to the anonymous data broker, has perfect impenetrable security. And in the history of the internet, that has never ever been the case. The data, once it's out there, is out there forever. A map of your life, available for the highest bidder, or the most clever thief. So we have this fundamental conflict. On one hand, a potential for significant savings on your car insurance. A promise of a fairer system based on how you actually drive. On the other hand, a Pandora's box of data privacy and security concerns that extend far beyond your monthly premium. It forces you to weigh a tangible, immediate financial reward against an intangible, but potentially catastrophic future risk. So, how do you make that choice? Is there a responsible way to engage with this technology? With all of these risks now laid bare on the table, is there any scenario where using an app like Root is still the right decision? And if you do choose to go down this path, or if you find your current insurer is pushing telematics on you, what are the concrete, actionable steps you can take to protect yourself and minimize this exposure? Let's start with the first, most fundamental question. Who is this model actually built for? The ideal Root customer is a very specific person. They are likely young, but they drive like they're middle-aged. They are tech-savvy and comfortable with app-based everything. They have a clean driving record, no at-fault accidents, no DUIs, no major tickets. They live in a relatively safe, low-traffic area, not a dense, chaotic city center where hard braking is a survival tactic. They commute during standard daylight hours, not in the dead of night. And crucially, their driving habits are genuinely, consistently, and demonstrably safe. For this person, Root can feel like a revelation. They are being judged not by the actuarial tables that lump them in with every other 22-year-old, but by their own merit. If you fit this profile, you are precisely the customer Root wants, and they will likely reward you for it. There's another group that can benefit. The driver with a stellar record but a less-than-perfect credit score. Traditional insurance carriers place an enormous, some would say unfair, weight on your credit history. They see a low score and automatically classify you as a higher risk, even if you've never had so much as a parking ticket. Root claims to be different. By focusing on your driving data, they offer a potential path to a fair rate that isn't dictated by a financial situation that may have nothing to do with your ability to safely operate a vehicle. But for every ideal customer, there's a terrible fit. If you're a night shift worker, a nurse, a security guard, a factory worker, the algorithm will likely penalize you for driving during so-called risky hours, regardless of how safely you do it. If you drive for a living using your personal car for Uber, Lyft, or DoorDash, most telematics programs, including Root's, will either deny you coverage or drop you if they find out. If your daily commute involves navigating aggressive, stop-and-go urban traffic, the constant hard brakes required to avoid accidents will make you look like a reckless driver to the app. And of course, if you are fundamentally uncomfortable with the idea of a private company logging your every move, your speed, your location, and your habits, then the potential savings are simply not worth the cost to your privacy. So let's say you've weighed the pros and cons, you believe you fit the profile, and you're ready to take the plunge. Or perhaps your current insurer is pushing their own telematics program on you for a discount. How do you play the game to win? How do you ensure you get the best possible score during that critical test drive period? Here are the concrete, actionable steps. First, and most importantly, treat the test drive period like you are retaking your driver's license exam with the world's most critical instructor in the passenger seat. This is not the time to drive normally. This is the time to drive perfectly. Your goal for these 2 to 4 weeks is to create a data set that paints you as the safest, most boring driver on the planet. This means changing your habits temporarily. Leave a 4-second gap between you and the car in front of you, maybe even 5. You want to eliminate any possibility of hard braking. See a yellow light up ahead? Don't speed up. Start slowing down immediately and gently. Anticipate everything. Coast to a stop. Accelerate from a green light like you're chauffeuring a priceless vase filled with nitroglycerin. Smoothness is everything. The algorithm isn't just measuring the G-forces of a hard brake. It's looking for patterns of smooth, controlled operation. Second, and this is the one that trips up almost everyone, your phone is the enemy. Root's app is exceptionally good at detecting phone handling while the car is in motion. The accelerometers and gyroscopes in your phone can tell if it's in your hand, bouncing in your lap, or sitting stationary in a cradle. Do not touch your phone, period. Before you put the car in drive, mount your phone securely on the dash or console. Set your music, set your GPS, and then do not touch it again until you are parked. If you need to make a call, use Bluetooth hands-free. If you get a text, ignore it. Don't even let a passenger hold and use your phone while you're driving. The app might not be able to distinguish between you using it and them using it. It just knows the phone is in motion inside a moving vehicle. This single factor can tank an otherwise perfect score. Third, prepare your digital environment. Before you start the test drive, make sure the Root app is updated to the latest version. Go into your phone settings and ensure it has all the permissions it needs for location services and motion detection, and set them to always allow. This prevents the app from thinking you're trying to hide something by turning permissions off. It's also wise to close out all other applications before you start a drive. You want to give the Route app the phone's full attention and processing power to ensure it collects the most accurate data. You don't want another app interfering with the GPS or causing a glitch that incorrectly logs a trip. Fourth, understand the scoring categories. While the exact algorithm is a secret, it primarily boils down to 4 things: smooth braking, gentle turning, focused driving, and safe hours. We've covered braking and phone focus. For turning, it's the same principle. Slow down before the turn, then accelerate gently out of it. Don't brake and turn at the same time. The app is looking for high lateral G-forces, which indicates you're taking corners too fast. The last category, safe hours, is the toughest to control. The app heavily penalizes driving late at night, typically between 11 p.m. and 4 a.m., because statistically, that's when the most severe accidents occur. If you have any flexibility, schedule your test drive during a period when you know you won't have any late-night obligations. If you absolutely have to drive late, make that trip as flawlessly perfect as possible in every other category to mitigate the damage. Finally, what happens after the test drive? You get your quote, you accept it, and you become a Route customer. Does the surveillance stop? The answer is no. The intense, score-generating test drive is over, but the app often continues to collect data in the background. While your day-to-day driving won't be scrutinized with the same intensity, your overall patterns will absolutely influence your renewal rate. If you spend the test drive period driving like a saint, and then immediately revert to being a speed demon, expect a nasty surprise when your policy is up for renewal in 6 months. The game doesn't end. The rules just get a little more relaxed. So what's the final verdict on Route? It is not a scam, but it is a gamble. It is a high-risk, high-reward proposition that represents the bleeding edge of the entire insurance industry. This isn't just about Route anymore. Progressive has Snapshot, Allstate has DriveWise, Geico has Drive Easy. The telematics genie is out of the bottle, and it's not going back. Choosing an insurer like Route is a bet. You are betting that your real-world driving habits are significantly better than what old-school metrics like your age, your zip code, and your credit score would suggest. If you win that bet, if you are the diamond in the rough that their algorithm is designed to find, you can save a truly significant amount of money. But if you lose, if your driving habits aren't as perfect as you think, or if your lifestyle simply doesn't fit their narrow definition of safe, you will have wasted weeks of effort, and more importantly, you will have handed over an incredibly detailed record of your life, your movements, and your habits for absolutely nothing in return. The question you have to ask yourself isn't just whether Route is the right insurance for you. The real question is, in an age of ever-increasing surveillance, how much of your privacy are you willing to trade for a discount? And if you are willing to make that trade, are you prepared to play the game by their rules to win? The future of auto insurance is here, and it is watching you drive. The choice of who or what is riding in the passenger seat is still, for now, up to you.